In 2004, Warren Buffett wrote a letter to Berkshire Hathaway shareholders that contained one line that would become the single most quoted rule in the history of investing. He wrote, "Be fearful when others are greedy, and greedy when others are fearful." Those 10 words have guided the richest investors on the planet through every crash, every war, every crisis, and every panic for the last 2 decades. And right now, at this very moment, that rule is flashing the loudest signal it has produced for Bitcoin since the 2022 bear market bottom. The Crypto Fear and Greed Index has dropped to 15. To put that number in context, the index runs from 0 to 100. 0 is maximum terror. 100 is peak euphoria. 15 puts us deep in extreme fear territory. But it is not just the number that matters. It is how long we have been here. The index has now stayed between 10 and 19 for multiple consecutive weeks. That kind of sustained extreme fear has only happened a handful of times in Bitcoin's entire history, and every single time, it marked a generational buying opportunity. The last time the Fear and Greed Index stayed this low for this long was during the 2022 bear market. Bitcoin was trading at around $17,000. Most people swore crypto was dead. The media ran headlines about the end of Bitcoin. Exchanges were collapsing. Trust was shattered. And anyone who followed Warren Buffett's rule and bought during that fear watched Bitcoin rally over 600% to an all-time high above $126,000. Before that, extreme fear hit during the COVID crash in March 2020. Bitcoin had fallen below $5,000. The world was shutting down. Nobody wanted to touch risk assets. The fear index dropped into single digits, and from that moment of maximum fear, Bitcoin rallied from under 5,000 to over 69,000 in less than 2 years. Before that, it happened in December 2018. Bitcoin had fallen from 20,000 to around 3,200. The fear index was in the teens. Everyone declared the bubble had finally popped for good. Bitcoin rallied from that bottom to a new all-time high within 3 years. The pattern is so consistent it almost feels like cheating. Extreme fear. Everyone sells. Smart money buys, price recovers, new all-time highs, and the cycle repeats. If you are new to this channel, subscribe and hit the notification bell. We break down the signals that separate smart investors from the crowd, and right now there is no bigger signal than this one. So what is causing the fear this time? You already know the answer. War. The United States and Israel are in a full-scale military conflict with Iran. It has been 2 weeks since the operation began. Over 15,000 targets have been hit. Iran's supreme leader was assassinated. The Strait of Hormuz, which carries 20% of the world's daily oil supply, has been declared closed by Iran's new leader. Oil has broken above $100 a barrel. Saudi oil facilities have been attacked. Dubai's airport has been hit. Multiple Gulf states are under fire. 13 American service members have been killed. The shockwave has ripped through every market on Earth. Japan's Nikkei dropped over 7%. South Korea's Kospi fell 8%. The Dow lost over 800 points in a single session. The S&P 500 is sinking. The Nasdaq is bleeding. Recession odds on Poly Market have climbed to 41%. Global investors are running for cover. And right in the middle of this chaos, something strange is happening. Something that most people have not noticed yet. Bitcoin is going up. Not crashing. Not collapsing alongside stocks. Going up. Bitcoin broke above $72,000 today, while U.S. stock futures were falling. The CoinDesk headline today reads, Bitcoin outperforms stocks, tops 72,000 even as dollar strengthens. That is not supposed to happen. When the dollar strengthens and stocks fall, Bitcoin is supposed to fall harder. It has been trading with an 85% correlation to the Nasdaq for months. But that correlation is breaking in real time. And this is not the first time Bitcoin has done this. CoinDesk published a separate report showing that Bitcoin's crash to $60,000 weeks ago actually predicted the stock market crash before it happened. Bitcoin peaked at over $126,000 in October last year and fell 50% while the stock market was still near all-time highs. Now stocks are catching up to where Bitcoin already went. Bitcoin crashed first. Bitcoin is now recovering first. It is acting as a leading indicator, not a follower. Why does this matter? Because it means Bitcoin may have already priced in the worst of this crisis. The fear, the war, the oil shock, the rate uncertainty. Bitcoin absorbed all of it between October and February. The stock market is only now starting to feel what Bitcoin already went through. If you are getting value from this, hit the like button and share this video with anyone who is sitting on the sidelines panicking. What they are about to see could change how they think about Bitcoin for good. Now, the obvious question is whether the fear is justified. Should you actually be afraid? Or is this fear the opportunity that Warren Buffett's rule was designed for? Let us look at what the smart money is actually doing while everyone else panics. Michael Saylor's company Strategy just purchased another $1.28 billion worth of Bitcoin in the first week of March. That is their largest single-week purchase in 7 weeks. They now hold over 738,000 Bitcoin, more than 3.4% of the total supply that will ever exist. Saylor's average cost basis is over $75,000, while Bitcoin trades around $70,000. He is buying at a loss and accelerating. He called it the second century because it was the company's 100th Bitcoin purchase. That is not the behavior of someone who is afraid. That is the behavior of someone who is being greedy while others are fearful. Tom Lee's Bitmine just bought another 30,000 Ethereum worth over $61 million. The company now holds over 4.5 million Ethereum. That is nearly 4% of the total Ethereum supply. They are doing this while the fear index sits at 18 and retail investors run for the exits. BlackRock just launched a brand new staked Ethereum ETF this week with over 100 million in assets and 15 million in first-day trading volume. They launched it during a war, during extreme fear, during a stock market crash. The world's largest asset manager does not launch products when they expect markets to collapse. They launch products when they expect inflows. Spot Bitcoin ETFs still hold over $93 billion in total assets. ETF inflows have been modest even during the worst of the selling. $251 million flowed into Bitcoin ETFs just this week despite everything happening in the world. So here is the picture. Retail investors are at maximum fear. The fear index says 15. People are panic selling. The media is running war headlines around the clock. And at the exact same time, the largest institutions on the planet, the Saylors, the BlackRocks, the Tom Lees, are buying with both hands. This is the wealth transfer. This is exactly what Buffett was talking about. Fear creates sellers. Sellers create low prices. Low prices create opportunities. And the people who are greedy when others are fearful are the ones who capture those opportunities. Now make sure to subscribe and like this video because we are about to cover the one risk that could still create a short-term drop, and you need to know about it before it happens. There is one event on the calendar that every Bitcoin holder needs to watch. The Federal Reserve meets on March 17th and 18th. This is not a normal meeting. This is the first meeting where the Fed has to factor in the Iran war, $100 oil, and Trump's 15% global tariffs. The dot plot updates at this meeting, showing where each Fed member expects rates to go. If the dot plot shifts from one expected rate cut to 0 cuts for 2026, markets will react negatively. And the historical pattern is brutal. Bitcoin has fallen after 7 out of 8 FOMC meetings since 2025. In January, the Fed held rates as expected, and Bitcoin still dropped from 90,000 to 83,000 in 48 hours. It is a persistent sell-the-news pattern. So the smart play, according to analysts who have studied this pattern, is straightforward. Expect volatility around March 18th. The initial reaction when Powell speaks is frequently reversed within 24 to 48 hours. The January FOMC bottom came roughly 2 days after the announcement. That 2-day window after the statement is historically where the smart entry happens if there is a dip. But here is the bigger picture that matters far more than one Fed meeting. Polymarket odds for Bitcoin hitting $100,000 this year just climbed to 42%. Kalshi, another major prediction market, shows similar numbers at 36%. These odds are rising while fear is at extreme levels. That is significant. Prediction markets are forward-looking. They aggregate the bets of thousands of traders putting real money on outcomes. And those traders are increasingly saying that despite the war, despite the oil shock, despite the fear, Bitcoin reaches 6 figures this year. The math is simple. Bitcoin sits around 72,000. 100,000 is roughly a 40% move. Bitcoin has made 40% moves in a matter of weeks multiple times in its history, and every single time the fear index sat at the levels it is at right now, the returns over the following 6 to 12 months were not just positive, they were extraordinary. December 2018. Fear in the teens. Bitcoin at 3,200. 12 months later, it was above 13,000. That is a 400% gain. March 2020. Fear in single digits. Bitcoin below 5,000. 12 months later, it was above 58,000. over 1,000%. June 2022. Fear between 10 and 20 for weeks. Bitcoin at 17,000. 18 months later, it hit a new all-time high above 126,000, over 600%. The data does not guarantee history repeats, but the data does show that extreme fear has been the single most reliable buying signal in Bitcoin's 15-year history. Not charts, not on-chain metrics, not influencer predictions. Fear. Raw, sustained, widespread fear of the kind we are seeing right now. Warren Buffett has never bought Bitcoin. He has called it rat poison squared. He may never change his mind. But the rule he wrote in that 2004 letter was not about any specific asset. It was about human nature. It was about the fact that crowds panic at the worst possible time and celebrate at the worst possible time, and that the greatest returns in history have always gone to the people willing to act against the crowd at the moment of maximum discomfort. Right now, the crowd is terrified. The fear index proves it. The media confirms it. The stock market screams it. And in the middle of all that terror, Bitcoin is quietly climbing while everything else falls. The question is not whether Bitcoin will survive this war. It survived COVID. It survived the 2022 collapse. It survived every crisis thrown at it for 15 years. The question is whether you will be positioned when the fear fades and the next leg higher begins. Because if history is any guide, and it has been every single time, the people who buy when the fear index is in the teens are the ones who build generational wealth. If this video opened your eyes, subscribe, like, and drop a comment telling us your fear index number. What level would make you go all in? We read every comment, and we will see you in the next one.